Let's move on because there are gold bugs, and then there is Peter Schiff, the CEO of the Euro Pacific Capital, joins us on the phone. Peter, great to have you back. I'm sure you're feeling a little vindicated now that gold has had a bit of a rally. And of course, now with this Syrian strike potentially looming, do you feel that the newfound need for safe havens like gold is even stronger?
Well, I don't think the safe haven, factor ever went away. I just think it got caught up in a lot of speculative selling that I think has now run its course, and gold market is headed back higher. We've had a little bit of a correction in gold stocks the last couple of days. Maybe that's ending today. But I think we're going to have a huge rally. I think we're going to make new highs, and I don't think gold ever really lost that safe haven status. Only temporarily, maybe people were confused based on the rush to sell in a short window. But, I think the fundamentals are fantastic, and I think Syria really doesn't make that much of a difference in the scheme of things.
Right.
I think it could be a small net positive. It could be a big net positive if we have some kind of protracted problem in the Middle East. But, even without that, it's a monetary problem that we have. We have a dollar crisis coming, a bond market collapse coming, and gold is going to be a safe haven from all of that.
Okay, a dollar crisis coming, a bond market crisis coming. Those are pretty big topics that we unfortunately don't have like 20 hours to explore. Let me talk about what's happening today then. You've got, for example, emerging market currencies collapsing. And that, at least today, is helping the dollar. So are you worried that maybe continued dollar strength, because it's also seen as a safe haven in difficult times, will hurt gold?
No, I don't think you're going to see dollar strength. I also think it's interesting that if you look at the initial reaction to the Syria problem, that day it happened, the strongest currency of the fiat currencies was the yen, followed by the Swiss franc and the euro. So investors were favoring those safe havens over the dollar, at least in currencies. But I think the reason that you're having the problems with emerging market currencies is years ago when the Fed was embarking on QE, and by the way, I don't think they're going to taper. I think we're going to get even more QE. But as the Fed was printing all this money and we were flooding the world with it, a lot of these central banks at the emerging markets made the mistake of trying to contain the rallies in their currencies by printing too much money themselves. And now that's coming back to bite them, because now as people are incorrectly perceiving that the Fed is going to tighten, they're trying to yank that money back out. I think the problem is that the emerging markets didn't allow their currencies to rise more earlier. That would have been a better way to fend off the inflows than what they did. But they did it to try to prop up the dollar. So ultimately, it's the U.S. dollar that's going to get clobbered. And I think we're setting up for a great buying opportunity in the emerging market stocks and in their currencies as well.
Well, I certainly agree that the emerging market should have taken a little bit more pain earlier on to save what they're going through now. But I do think you're pretty much the only person that I've spoken to that is expecting more QE at this stage as opposed to less. But nonetheless, let me ask you, Peter. We asked our Twitter followers if they have any questions for you. And Supfresh, it's our turn, tweeted us this. Mr. Schiff, are you afraid the government will seize physical gold in your doomsday scenario? If so, how should you own it? Peter, what would you say?
I mean, that is something to fear. I don't know if I think that's going to happen, but I do advise people to take precautions. I mean, I tell people we sell a lot of physical gold to our clients, and we recommend that they not put it in the bank, maybe that they store it in their own safe at home. We also advocate storage offshore. We're helping clients store gold in Australia, in Switzerland. So it is a possibility. I don't know how likely it is. But by the way, even though I believe the Fed's going to do more QE, and even if they make the mistake, in their mind of tapering in September, which I don't think they're going to do, but even if they do that, they're going to have to undo it probably by the first quarter of 2014 and really open up the monetary spigots even further. But I don't think it's what they should do. What they should do is stop all QE, and they should start shrinking their balance sheet. But what they should do, and what I think they're going to do, are two entirely different things.
Right.
Because the Fed is going to act for political reasons, short-term expediency. They will never do what's right for the long-term health of the U.S. economy.
Well, whatever they do, I certainly hope they do it gradually, softly, so they don't get a massive disruption in the market. Before I let you go, Peter, real quick here, where is gold going to end the year? What price?
Well, that I don't know, right? I think it's going to end higher than it is today, and I think it's ultimately going a lot higher. But, when people are going to wake up to the reality of the problem that the dollar faces in the U.S. economy and the bond market, right now, my view is a very, very minority view. Very few people agree with me. By the time that the majority agrees with me, and they will eventually, the gold price is going to be up in the stratosphere.
Peter Schiff of Euro Pacific Capital, always good to talk to you. Thanks for joining us.